our news channel. Credit crisis and the dot-com bubbles are the two major global financial crises in the recent decades. As the saying goes, learning from the past and avoiding from now on. We are honored to invite two important people. One is the critics from the financial industry, while another one is an owner of the dot-com companies. They will share with us the causes of dot-com bubbles. After that, we have Professor Leung from the Queen's College of Hong Kong to talk about the similarities between the dot-com bubble and the credit crisis. Before that, let's get familiar to what dot-com bubble is. It starts from the 1990s, when the age of computer began. When every people expected that there is a brilliant future in the computer industries, they started to invest heavily in it. Some of them invested in the existing companies, while some of them opened the new companies. Venture capitalists also invested heavily in it. Not surprisingly, the Nasdaq index rose from 2,000 to 5,000 points in just 2 years' time. However, soon people realized that most of the companies are set up just for the speculations of capital gains instead of a good business plan. This resulted in a massive withdrawal of capitals out of the computer industries. Nasdaq index fell from 5,000 to just 800 points in 2 years' time during 2000 to 2002. Many related companies went bankrupt, while the technology professionals lost their jobs. Now, let's move on to our interview with Joyce and Wendy. We are pleased to have Wendy Lai, a famous critic in the financial industry, to share with us her views about dot-com bubbles. Thank you, Wendy Lai. Please be seated. Who is the major culprit in the dot-com bubble, you think?
I think there are several stakeholders involved in the crisis. But if you ask who should bear most of the responsibility, I think that must be the investment bank. Of course, dot-com companies should be blamed, but if they could not go public or if their IPO could not be successfully launched, how could ordinary investors reach them? So the major culprit must be the investment bank.
What will be their benefit when taking dot-com companies public?
I think there are two major benefits they could obtain from taking the dot-com company public. First, they can have a huge capital gain as they did not need to follow the lockup agreement. You may ask, what is a lockup agreement? This is a contract prohibit insiders, say like company executive, manager, employees, and venture capitalists from selling their share right after the IPO day, as they don't need to follow the lockup agreement, so they could have a huge capital gain because they can sell whatever they like. Second is they can earn commission from underwriting the stock So they can have 7% commission from the capitalization during the IPO. So with this fascinating return, I can see that they're really eager to engage in such activities.
People also blame iBanks for letting too many dot-com companies going public, but without strict verification of their capabilities. Do you agree?
Absolutely. I think that's exactly what I think the iBank did wrong. It is reasonable that they are profit-driven, so they took dot-com companies to the public, but it did not mean that they can ignore or violate regulation, or they can be that irresponsible in assessing the capability of the dot-com company. In fact, some of the dot-com company, when they go public, they were in net loss or they have no real business plan. So investment bank failed to give accurate information to the investor, and they misled market investor. So they must bear most of the responsibility.
That's all for today's interview. Thank you very much. Today we have Joyce Lee, an owner of dot-com companies, to share with us the cause of dot-com bubbles. Thank you, Joyce.
You're welcome.
Why did you join the internet industry?
In the 1990s, the internet industry was developing rapidly. Computer-related products were becoming more popular and general. So, I joined the internet industry as I had an optimistic view to the market too. However, I have some concrete business plan and willing to provide some user-friendly products to the customers, unlike some irresponsible .com companies.
Why were there two types of .com companies?
For the .com companies like me, we were working according to our business plan to provide some products to satisfy customer needs. However, as in the 1990s, our stock price were pushed up by the positive expectation and the decreasing and low interest rate. So, some people set up their .com companies not for earning profits through their business, but they are just speculating to earn the capital gain from their stocks.
However, setting up a company needs a huge amount of capital. How could those irresponsible .com companies have capital to start up without a real business plan?
That was because the venture capitalists, which provide venture capital for us to start up our companies, also got some optimistic expectation towards the industry. The venture capitalists could earn if our stock price rise. So somehow they are assessing the .com companies in a profit-oriented way. They assess only the potential gain. However, they are somehow underestimating the potential risk of providing venture capital to us. And as a result, they provide venture capital to a lot of new .com companies to support their startup. So the irresponsible .com companies started.
Do you think that the irresponsible .com companies were to blame for the .com bubbles and its collapse in the 1990s?
Of course, there were too many .com companies in the industry, and we were facing keen competition among ourselves. In order to fight against my competitor and survive in the industry, we were providing some free product in the market to attract more customers, because we believed that if we got a number of customers in the market, we may set a higher price in the future to gain a great profit. However, I had never thought that the investor would think that I'm financially weak when I was suffering from a temporary net loss. No one wanted my stocks after that, and I nearly got bankruptcy at that time. Those .com companies not based on real business should be responsible for the .com bubbles and my losses.
Thank you for your coming.
So far, we have investigated into how the .com bubble was inflated. The causes include low interest rates in the 1990s, high expectation on the industry, while many .com companies were not supported by real business and they are financially weak. Also, many investment banks did not do well in controlling the IPO because of the lockup agreement. By this time, I believe all of us have some understanding about how the bubble was formed. But then, what kind of impacts did it bring to the economy and financial market? And how are we affected by the burst of this bubble? Let's see. First, the Nasdaq index had been free falling from sky high to the level ground in a stunning speed, falling a total of $5 trillion of stock value in just 18 months, while the Dow Jones Internet Index had died for more than 72% since March 2000. Second, this has caused the loss of value of many .com companies. Priceline, online retailers, Priceline and eToy had lost 99% of the value, while many other .com companies had went bankrupt. Third, seeing no way to repay the huge amount of debts, the .com companies are either liquidated or have been taken over by other large dominants in the same industry, like the acquisition of YouTube by Google. Third, the collapse of many .com companies had led to the layoff of many technical experts, who then later faced many difficulties in finding similar jobs in the job market. This has increased the unemployment rate at that time. Despite all the negative impacts the burst of the bubble brought about, a spokesman of the Senate Banking, Housing, Urban Affairs Committee, Christy Harlan, said there was nothing for Washington to do. There were no regulatory lessons to learn from this crisis. The system seemed to work. Whether this saying is correct or not is yet to be determined by the public and the facts. So, did investors and bankers learn a lesson from this crisis? To answer this question, we are going to explain the similarities between this crisis and the credit crisis in 2008. Thank you.
It's never rare for us to find that human beings have been duplicating the mistake over and over again. From the analysis, we find that there are altogether 4 similarities between the credit crisis in 2008 and the dot-com bubble crisis in the year 2000. The first one would be the bubble and the herd behavior. Bubble which is the most obvious thing observed from both crises, which when the people observe the price to increase, the price then increase, right? So this is the characteristics happening in both crises. So why do people have their expectation over the change in prices? It's because the economic boom has blinded their eyes. The investors, some of them even not investors who have no prior knowledge in the investments. They're just following what the others do in investing in the security markets. So in its peak, the people start to believe that the markets will never fail, which is in turn turns to be a religion. Why? Because the investors, they go to the markets once a day, 5 times a week, to put their money in the markets while they reach the market to grant them the profits. So what the Christians do, they go to the church once a week and put the money in the boxes, and which the God will grant them the profits, not profits, but grant them away from the temptation, which them the good fortune, right? So therefore, this is the herd behavior. The second similarity would be the problematic underlying assets, right? In the both crises, it is observed that there were some problematic underlying assets behind the markets. In the year 2000s, the dot-com company assets were found problematic because some of them were just the assets were just the papers written with some ideas without any clear business plan, without any clear direction, or even some tangible assets. So therefore, some of the owners of those companies were even just speculators who wished to earn money through capital gain. While in the year 2008, the mortgage-based security markets, the underlying assets is obviously the subprime mortgage, right? The subprime mortgage is the most problematic thing, that the subprime borrowers, their credibility were not guaranteed, right? There's a higher risk for them to default their loans. So all of you maybe have known that the storyline after in the late year 2008, that the large-scale default has happened, right? So why there's no one ever pointed out that the problematic underlying assets? Because there is what? There's the failure in supervision and control, which brings us the third similarities. There were 3 stakeholders in the market. They should be blamed. The first one should be the investment banks, right? In the year 2000, while during the technological bubbles, the investment banks, they wish to earn more brokerage fees and wish to gain more those are arbitrary opportunities by pushing all the technological firms into public, right? So therefore, some technological firms were even ineligible. They were also pushed by the investment banks in pursuit of profits. 8 years later, the investment banks were also blamed for the of possessing the high leverage ratio and engaging in too much risky operation and investments into security markets. The second one, the second stakeholder to be blamed should be the credit agency. The credit agency has failed to reveal all the risks behind the mortgage-based securities before the outbreak of the credit crisis in the year 2008, right? It's very weird to hear that even one of the major credit agency, Moody's, they have redesigned their guidelines to attract more customers to use their services. Right? But the point is, the credit agencies, this most important of their duty is to reveal the risks in an objective and accurate analysis. So Moody's has failed to achieve this point. The third one to be blamed should be the mortgage provider. the mortgage providers have provided too much subprime mortgage to subprime borrowers, in which the subprime borrowers, subprime borrowers, they are subprime because their credibility is low. There's a high risk for them to default. So therefore, the mortgage brokers has played a role in bringing more risks to the security markets. Oh, thank you, Henry. Now, the topic today is slightly too bitter. But the good news is, in 30 minutes I will forget about the bitterness. Why? Because I'm human beings. Human beings are forgetful, just like the investors. The investors, they have tasted the bitterness from the technological market crash in the year 2000. But in 8 years, they're duplicating the same mistakes over and over again in the credit crisis. So therefore, they've never learned a lesson, right? So, the last similarity between the both crises is the following. Asymmetry. Asymmetry is observed whenever a market is ready to collapse. In the year 2000s, the stock prices and the real value of the technological firms have been observed that they're in a symmetrical relationships. While the stock prices of those dot-com companies surged to a sky-high level, but they actually did not give up any actual good performances or even some good future or prospect of their business. While in the year 2008, asymmetry has been observed in the relationship between the debt and the equity. The financial firms they want to increase the revenue from the security markets because they want to engage more and more leverage in order to finance for their spending on the financial security markets. So therefore, historically high debt equity ratios was the record before the outbreak of the crisis, especially Lehman Brothers, which is famous for that. So therefore, the equity could not support the debt. So with all these four similarities observed and analyzed between both crises, we find that human beings have never learned a lesson. So therefore, in the whole, that the human beings have learned a lesson. So therefore, in the whole, we hope human beings did really learn a lesson from the market crash. But who knows?
Thank you, Professor Leung, for delivering us this inspiring speech. When compared with the credit crisis in 2008, four major similarities were found. First, herd behavior were observed in both cases. Blinded by the potential gains from the rising trend, investors neglected the real value of underlying assets and the risk involved. Second, asymmetry in markets were found by both cases. Dot-coms were highly overvalued when compared with their weak basis. And investment banks were over-leveraged and suffered from a high debt-to-equity ratio in 2008. Third, regulations and supervisions were loose. In 2000, underwriters allowed many unqualified dot-coms to go public. In 2008, investment banks covered down their risk of the MBS and offered them with high ratings. Last but not least, the underlying assets were problematic. Many public dot-com companies were not profitable in 2000, and MBS were weakly supported by prime and subprime loans. As what Professor Leung said, history repeats itself. With similarities of causes explained above, all stakeholders of the financial markets ought to pay careful attention to these signals. Thank you very much for watching. See you next time.